Welcome to the weekly close live here for this edition, mid-July.
Yep.
Joseph, welcome as always. How are you doing this week?
Dave, I'm not gonna lie to you, man. It's hot.
Oh, really? Yeah, it has. It's been very nice here. The heat wave we had a week or two ago has totally subsided. It's just kind of been perfect temperatures the last little while. Yeah,
We're coming out of a drought. It's cooling down, but cooling down still means high 80s, low 90s.
yeah, that's hot. Yeah, that's hot. Alrighty, well, as always, I will start pulling up the weekly closing numbers, and while I do that, you can't say anything because you're under an NDA.
Hey, that's unrelated. I'm gonna actually yes, an NDA was signed this week for a future product project. Look out for it in about 6 months. All I'm allowed to say. But I want to shout out Dividend Dave today, who, when we were doing our like 5 minute pre-call chat, suddenly did a full minute countdown, and then that he never warned me about, and then we didn't go live.
Exactly. I have no idea how the countdown works. I was trying to talk to you, and it was saying your mics are muted during the countdown, and I'm
That's
like, well,
what
that's
mine said.
useless.
I was saying, most of my mic was just saying, "Hey, what the heck is happening?" But
All right. With that said, we will quickly get into the closing numbers. Starting as always here in Canada, Toronto, the TSX Composite Index closing the week at 22,690, and of course that is in CAD. I do have the 5-day chart right here. If you look right here on late Tuesday, if I can just get the cursor in the right spot, doesn't want to cooperate right there. Before close on Tuesday, you see 22,992 in the graphic, but over here in the 52-week range, 22,996. So yeah, I am quite sure. Well, yeah, definitely that's the 52-week range. So that is an all-time high for the Toronto Stock Exchange. Moving right
that's
along. I thought you might have a comment. No,
I was
okay.
saying I was saying that's surprising given what's happened over here today.
Yeah, so this moving over to the S&P 500, closing the week at 5,505 on the nose, and again in USD. The 1-day chart, a lot of red. We'll probably talk about what happened today.
Shout out
Um,
CrowdStrike, everybody! You made my
Shout
day
out
at
to
work
CrowdStrike.
so
Yeah, that's how
easy
we should have. Yeah,
today.
exactly. The 5-day chart also for the S&P quite red. Earlier this week around here, was it the Mag 7 had quite the nosedive, or was it here? Maybe I'm not sure, but
Who's to say?
one of those days, the Mag 7. But the 1 month chart, the S&P 500 is still plugging along, and of course, the 6-month chart it's a rock star. So S&P is still a pretty good index to follow, obviously. Oh wow, the Dow closing even higher this week than it did last week. 40,287.
What is
Get
up,
back to the
health and
5-day
wealth?
here.
Hey,
Sorry, say
actually,
again.
I was saying, what's up, health and wealth, over in the YouTube chat? Actually, health and wealth. Here's a question for you. I'm going to start the discussion early. CrowdStrike is down 12% today. Buy the dip or no?
Yeah, health watch, health and wealth. Sorry, trying to just give you a shout out here. What's up, fellas? Yeah, we're doing great. Thanks for joining the chat. Just kind of quickly getting through the closing numbers for the week, and then we will get into the earnings calls as we always do. So yeah, wow, I did not realize that the Dow Jones had this week. Look at that, all the way up to 41,367
And then the world
on
shut down.
Thursday, and the 52-week range at 41,376. Wow, wow, wow. Interesting. Uh, Canada US dollar again. I cannot afford to travel to the US. It's not even going to round up to 73 cents for me. It's going to keep me below 73. Always rounds up until today for whatever reason. There it goes, rounding up to 73.
I think maybe it just doesn't like us today.
Crude oil on the New York Mercantile closing the week at $80.25. And again, we're back to USD. And if I'm not mistaken, wasn't last week's close right around that same price?
I don't remember. Real quick, I'm going to shout out health and wealth again here. Tough to say, solid stock until today.
Oh,
But
yeah.
ain't that the truth? I mean, their year to date's still green, but it's barely hanging on.
Yeah, obviously, sorry to we're talking a little bit about CrowdStrike here. Obviously, that is the news of the day, the big topic of the day. And
Oh
yeah,
yeah.
health and wealth. Uh, joining us in the chat. 12% is decent, but wait for an upswing.
I mean, I guess the question is, do you think this is a problem in CrowdStrike's business model? If so, do not buy the dip. Or do you think this is just reaction to one day of really bad news? If so, buy the dip.
Right.
Not
Yeah.
financial advice, of course.
And it's not even so much bad news. It's just that what actually happened, right? Oh,
Oh
an
yeah.
update and a bug in the software in the update. So
Yeah.
where were we?
Whenever crude
Bitcoin in
oil.
Canadian dollars, because I know you love watching Bitcoin in Canadian dollars. It's had quite the rise over the last 5 days as well. Obviously, Bitcoin never closes, but currently at 92,265 in CAD. Moving along quickly. Gold, gold. $2,402 in USD.
That ain't bad.
No, it's well, the 5 day is red, so it must have
I
closed
mean,
higher last week.
I would say still the year, the 5 year should be very green.
Yeah, well, the 1 month even is
Oh,
very
there we
green.
go.
The 6 month very green, all the
Yeah,
way back to it's in January to now. It's risen nearly $400 per ounce, obviously.
ridiculous.
Yeah.
Like, who's getting a 25% return on their gold in 6 months? Who?
There obviously there's people out there doing it.
I mean, you're right.
Yeah. The Nasdaq closing the week at 17,726. Let's jump over to the 1 day. Obviously,
Yep.
like everyone else, they had a rough day. The 5 day also again, the Nasdaq. This must have been the day right there that the Mag 7 had that nosedive.
Oh yeah.
And of course, if you could, just to zoom out, the 6 month as well. You go back to January, they're at 15,425, and look where they are. You know, as of just a couple weeks ago, well over 18.
Market's
Still,
on a tear.
yeah, which we know is going to come to an end at some point, someday. And shout out to our friends over there in the United Kingdom. In London, the FTSE 100 closing the week at 8,155 quid in Great British pounds. I thought you were gonna take it there.
No,
And
no,
of
no.
course,
I wouldn't dare rob you of that one simple pleasure every week.
getting to say the word quid once a week. And shout out to Akito, our very valued viewer, watching us every Saturday morning in Japan. The Nikkei closing the week at 40,063 Japanese yen. The 6 month there too looks pretty good. 1 day interesting. Who knows what
There
happened
it
here
is.
midday?
Yeah.
No idea,
Ja-
right? Like we just don't follow the
Japanese.
Japanese stock exchange to know what's going on.
I would say Asian markets, usually due to disclosure laws, are always a little more volatile, traditionally speaking,
Right,
especially the Korean market.
right. I'm gonna get this graphic going right away. No, I did something wrong. I think I hit stop sharing instead of share this tab. Oops. I'm allowed to make a mistake now and then, right?
Ladies and gentlemen, at a million subs, we will hire a production crew.
Oh man, oh man. That's the one I'm looking for. There we go. Alrighty. So Monday's earnings, two really big ones before open Monday. Obviously, Goldman Sachs and BlackRock. What are we thinking with these two?
So we got to hit Goldman first, of course. Goldman reported like you said, before market open on Monday. They were the first call. A lot of people heard this week. And that's really about all there to say to it. At one point, the stock was up about 5.5% today, this week, before crashing today with the rest of the market due to that
Right.
one little bug in the CrowdStrike system. They did have a nice little EPS beat, 862 a share actual over 834 a share estimated, which is, God, $8 a share in earnings is absolutely ridiculous. I mean, the main thing I read about them is like they're still a dividend play. Their dividend is extremely shored up. Looking into their markets or their overall call, I couldn't find a lot of breakdown of their call, but they've talked about their M&A business is what they expect to be really carrying growth over the next however long. And M&As in the U.S. or not, excuse me, M&As globally have been $1.6 trillion this year globally. Wow. That's up 20% over the same first half of last year. Goldman being one of the largest M&A, I don't know if you want to say providers in the world or middlemen, it stands good for them.
Yeah. Are your dogs okay?
Yeah, my mother-in-law is visiting and she just got home from shopping. They quite like my mother-in-law.
Yes. Okay, fair enough. BlackRock,
world's largest asset manager. Let's go and get that one out of the way quick. So we always got to say it. BlackRock, very similar to Goldman, peaked about 4 and we'll call it 0.15%, 4.25. They did not get hit down near as bad as Goldman did. Still closing the week just short of 2% up. Another very solid earnings call, 10.36 a share actual, 9.95 a share expected.
Wow.
I mean, what do you say? It's BlackRock, Yeah. So there have actually been, I should have said this even with Goldman, BlackRock and Goldman have been dipping their toes into crypto a little bit, as we saw with the Bitcoin ETFs, which Dave, you and I spoke with back in like some of our first episodes.
Mm-hmm.
And I mean, they're getting ready to do it. Like BlackRock's current CEO and co-founder, I think Larry Fink, I believe would be his name, actually spoke very highly about Bitcoin this week, saying that he, if I remember correctly, the wording he used was legitimate. Oh. I just read an article about it this morning and he even said the average investor should be investing in Bitcoin, and he plans to, bring Bitcoin to BlackRock.
Wow. That's interesting to say the least.
I mean, again, world's largest asset manager over here. So I mean, his word probably is only second only to what? Jamie Dimon?
Yeah.
CEO of Morgan Stanley for everyone out there.
Yeah. JP Morgan.
You're right. You are right.
Sometimes, right? Sometimes I get one.
Yeah, you know what they say, Dave? A broken clock's right twice a day.
Exactly. You just hit the nail on the head. The rest of Monday looks like some more smaller regional banks.
I'll hit First Bank real quick just because, hey, Charter, if you're watching, shout out First Bank. North Alabama based. I think, First Bank is Nashville based, but they do operate a lot in North Alabama. Up 6% on the week. Pretty good earnings call. 84 cents share actual, 76 share expected. Yep. I did not research First Bank at all before right now. Yeah, First Bank, they're doing. I mean, banks are eating a little bit right now. Which is kind of a weird thing to say with a lot of these regional banks, because like in theory, as Dave, you and I have talked about several times now, delinquency rates on loans are very high right now in the U.S. Mostly because interest rates are very high in the U.S. right now. So the want for lines of credit and the want for loans of demand is the word I'm looking for is down, as is on the other side, delinquency is up. So kind of weird to see a lot of like really good bank earnings calls this week, which will continue over the next like 4 days. With those numbers, because it's almost like we talked about that a quarter ago, and they really talked about it 2 quarters ago. But this quarter, nobody really talked about it. They kind of just said, "Yeah, we're fine." Like it almost sounds like all the banks got together and are trying to bully Jerome Powell into a rate cut.
So, a rumor that I saw on Twitter right before we went live, I was scrolling as I do 24/7, and I saw it was actually shouted to Settling Nomads that tweeted it. I have no idea where he got this information, but the rumor is that next Wednesday, the Bank of Canada is going to cut another 25 basis points down to 4.5%. That will be 2 cuts over the course of about, 3 or 4 months? They cut about 2 months ago, give or take.
That would be, surprising to say the least. As a U.S. citizen who is still not cut rates, but I get it.
Yeah.
I
Can
see
you
it.
read before we move on to Tuesday? Can you read the ticker symbol?
For First Bank?
No, the on the bottom of our screen. Do you see the ticker symbol that I have scrolling?
I'll shave my head when we hit 100,000 subs on YouTube.
I'll do it, and
So
I'll grow my hair until then. So
I know I don't know how many viewers we have right now. Unfortunately, Dave doesn't share those stats with me live, but I do know that the vast majority of our live watchers come from X. So if you are on X, head over to at Lovey1973. Hit that link.
just search the Passive Income Posse
Yeah.
on YouTube, and it'll come up, and you can subscribe, and we'll get there.
It's free. It's totally free.
So free.
And health and wealth. Let's go on that bank cut. I'm on a variable interest rate. We're currently paying 6.95%. Dude, from all the people I know, 6.95 is not bad.
Oh, that's so high.
I mean,
Are you in
is.
Canada or the U.S.? Health and wealth. I'm not sure. Hopefully, he or she is listening and will let us know.
Man, I hate to. Is that not SoCal Gula? Because his podcast is health and wealth. That's just
possibly.
That's who I've just assumed this is, and I haven't wanted to say it, but yeah, are you SoCal Gula?
Well, hopefully they answer us as we move on. Let's move on to Tuesday. Where are we on Tuesday? Yeah, and then suddenly, for 3 weeks now, we've been talking like
that's
basically
not
literally just
SoCal
filling
Gula.
time going, what are we doing? Now all of a sudden Tuesday, Wednesday, Thursday, Friday, there's just so much going on.
There's so much.
And I know you're limited for time this evening, so I'll let you just jump in here and take whatever you want.
All right, ladies and gentlemen, we are now in the quick hit section of the podcast. All right, so let's start with Bank of America. Bank of America up a little bit more than 2% this week. 83 cents a share actual, 80 cents a share estimated. It's the bank. I mean, God, what do you say that you didn't already say about Goldman and BlackRock? It's Bank of America. I mean, like, at least in the U.S. banking industry, not to the extent the Canadian banking industry is, but like, I mean, banks are strong. Like the bigger, I don't like the term too big to fail, but these large U.S. banks are very, very strong right now.
Right.
And then let's go ahead and keep on moving. United Health Group up 12% this week. And just a fair reminder that, United Health Group, health insurance company. I'm not going to say it's a uniquely U.S. problem, but it sure is a U.S. problem. $6.80 a share actual, over $6.66 share estimated. There is a commentary on that I am not going to make. But yeah, actually they did it really well. United Healthcare, their overall quarter results, revenue was up, profit margins were up. Man, health insurance doing great, apparently. Who knew? And then we are going to skip down now to Morgan Stanley, that guy. And I do want to take a quick shout out to Edward Pick, the CEO of Morgan Stanley. I'm sorry for calling you Jamie Dimon. Morgan Stanley, one of the few banks, down about 2.5% this week. $1.82 a share actual, $1.65 a share estimated. And the only thing I really note was that Morgan Stanley announced they were going to really diversify their business model. I don't know exactly what that means, but I do also want to say, and please somebody in the chat correct me about this if I'm wrong. I did read something this week. Morgan Stanley tells customers to potentially expect to start paying for your checking account. Woohoo.
I saw that, and I literally tweeted out, yeah, Canadian banks have been doing that for decades. So
U.S. banks used to, and then they stopped. And to an extent, they still like. Right now, it's like you pay a fee if you don't swipe your debit card 5 times or something like that. It's very attainable things.
5 times in a month, and people are probably you've got that covered in the first 2 or 3 days easily, right?
Oh, without a doubt. And moving on, I did not do Schwab. I should have done Schwab, but I didn't. Totally forgot about that. Moving on to PNC, a bank that I used to bank with but left because I felt like they were charging me fees unfairly. There's a fun story. Up about 4% this week. Doing pretty good. PNC, $3.30 a share actual, $2.98 a share estimated. PNC, like, you look a lot like the mirror BlackRock because, like, of course, Morgan Stanley, but like as we go back into the banks we talked about on Monday, they're very online banks. They make a lot of money from their investing. But you look into like people like PNC, Bank of America, and I'd even throw Wells Fargo into the same camp, even though they did not report this week. Who rely a lot more on their brick and mortar banking business and like their business checking and their personal checking.
Sorry, Health and Wealth said he's got to run. He's in Orillia, Ontario. Haha, no, it's Mike. Got to run, guys. Keep going. So, not who we thought that was.
No, it's not. But hey, we do appreciate you very much for tuning in. Have a good one, man.
Yeah,
Enjoy the weekend.
and yeah, so obviously, Orillia, Ontario. That, for those of you who don't know, is about a 3-hour drive, pretty much straight north of Toronto.
That I did not know.
It's a nice little town or mid-sized city. Not too bad.
So the big thing that I wanted to note, though, about PNC's earnings call, they announced for the full year of 2024, they expect net interest income. So basically their income from interest on loans to be down 4%, with revenue to be down as much as 2% because of that. So I mean, it's not huge, but we still kind of get into that, delinquencies. But also PNC said in their earnings call, they're pricing in as many as 3 rate cuts in the U.S. this year.
Well, and that's the other thing that we've seen people on Twitter, on X, talking about, cutting as much as 200 basis points over the course of the next 6 or 8 months or 9 months.
If they cut 200 basis points, I don't know what I'm going to do. Like, that would be an insane retreat. Like, I wouldn't complain, but I do not honestly believe that Jerome has it in him.
Well, and I mean, it's such a slippery slope, or such a tough balancing act with inflation.
Oh, for sure.
I obviously we all get it. We want rates to come down. We want to be able to borrow for cheaper, for less. But at the same time, we don't want to just be paying through the nose with, the inflation we've gone through over the last 4 years. That just needs to end.
So I've got 2 mortgages that I'm just waiting to refinance. So, Jerome, Jerry, maybe Jeb, I don't know, buddy, boy, we know you watch the pod. Hop in the chat real quick and let us know what you're thinking.
Exactly. Let's keep moving on, because we're still only on Tuesday, and I know, like we've already mentioned, you have a hard cutoff today because you have to go and meet somebody for one of those.
Yeah, we got a handyman coming to help us fix up the rental house.
Are we into after close on Tuesday?
The only thing I have to talk about, and it's very brief, is Interactive Brokers. Who's a company, I don't know, who's always kind of weird to me. Like, I understand broker dealer, trading business, all that. They work with hedge and mutual funds a lot. But man, there's such a niche product for someone with a market cap of what are we looking at right now? What about 51 billion, which is pretty nice. Stock's down 2.5% this week. $1.76 share actual, $1.74 share estimated. But actually, analysts are saying they could see Interactive Brokers net income, or maybe it's gross. I just wrote down income. Don't hate the player, hate the game. Grow by as much as 26% in the second half of 2024, which would be, I don't know where that number comes from. Maybe, source, I made it up. I don't know. But
that's me, bro.
Exactly. The source, it was revealed to me in a dream. But yeah, that one analyst is why I even wrote down Interactive Brokers, because, 26%? That would be huge for the second half of a single year. And a company that's been around since what, the 80s? 77. I was close.
Right.
They're not new.
Anything more that you want to hit on after close Thursday? JP Hunt.
I'll shout out Hancock Whitney, because you're a South Alabama grad. Hancock Whitney Stadium's the football field, but that's about it.
All right. Fair enough. Fair shout out.
Go Jags.
Wednesday, ASML, Johnson & Johnson, Ali, U.S. Bancorp. This is all before on Wednesday, before open.
All right, so we got to hit Johnson & Johnson, one of the biggest dividend stocks out there if you have ever scrolled Twitter.
Right.
Johnson & Johnson up about 3.5% this week. Let's also talk about down about 1.5% this week, down about 2% over the last year, and only up about 14% over the year-over-year. Take this how you want. Is Johnson & Johnson a blue chip? Probably. Stock's about a 3% dividend yield right now. I mean, they are easily one of the most stable names in the healthcare business, because, I mean, they've been around for how long now? 1887?
Yeah, wow.
Yeah, it's Johnson & Johnson, boys. They're going to print money. $2.82 a share actual, $2.70 a share estimated. So another solid earnings beat. Call it about a 7% one, I'd say, maybe about a 6. And I know that they had some pretty good, or at least they said some pretty good drug candidates and drug testing going away right now. I know I read specifically an epilepsy one. I don't really know any more about that. Sorry, guys, my degree's in finance.
Yeah.
Um,
Fair enough.
And also, they mentioned I didn't see anything currently in the works, nothing that I really noted when I was skimming through some articles. Their medical technology sales are through the roof right now, and they also see themselves engaging in some pretty consistent M&A over the next year. Oh, I did write it down. Shockwave Medical is who they're buying out right now. What does Shockwave Medical do? I don't know.
Okay.
But they're buying them.
And if they're buying them, it's probably a good move because a company doesn't last for 137 years by making bad moves, right?
That was some quick math, Dave. I'll give you credit.
Honestly, it took longer than it should have, but I did do it in my head. So
that said, I'm gonna jump down to my favorite bank stock in the U.S. Not investment advice, but I do love Ally.
okay.
I am a longtime Ally customer, and I have been nothing but thrilled with them. I will happily sing the praises of Ally. Plus, when you get their debit card, it's a really nice shade of purple.
Not sponsored by Ally.
No, not at all.
You know how to hit us up in the DMs.
I'll say I will. I am just that happy of an Ally customer. Every problem I've had, they've been so prompt in fixing it. I've no complaints. Either way, stock's down about a % this week.
Before you move on, Canadian banks, take note. Take note about how happy a customer is.
RBC, give me a call. We'll talk.
Yeah, exactly, right?
Ally Financial down about 1% this week, 97 cents a share actual, 64 cents a share estimated. This is 30 cent a share dividend, by the way, coming out. Let's see here. Where did I write down Ally stock? Because they were one that I wanted to specifically note because Ally is a fun one. Because so Ally, let's back up and let's talk the history of Ally real quick. Ally was not originally Ally Bank. They were they're based out of Detroit, and they were, I think it was General Motors financing arm. They were like General Motors financing company. So and that was within the last 20 or 30 years that Ally branched off from that and became its own company and became a full-fledged bank. So kind of looking into that, still to this day, Ally's biggest revenue by far is still its loan division compared to other banks like a Morgan Stanley, again, who see a lot from like their checking accounts and things like that. So cars are like Ally's, if not their number one, they're number two. So let's talk about that. New auto loan sales for Ally were down 19% year over year.
That's a big drop if that's like the top of your core business.
Net income was down 11% year over year because of that. And most importantly, net charge-offs for this quarter were $435 million. That basically means that, and that's on auto loans alone. So that's $435 million worth of auto loans that were charged off this quarter because, people aren't paying the bills.
Yikes.
Which is a lot higher because it was only $399 million in the second quarter of 2023. So we've added about $40 million in charge-offs over only a single year. But also then, the number doesn't seem so bad. They did $539 million in charge-offs in auto loans alone, retail auto loans. So to consumers like me and Dave in the first quarter of this year. So auto losses for a bank that specializes in auto lending, guys, what's going on?
Yeah, exactly. What's going on over there? When your core business, when you're like the top 1 or 2 or 3 in your core business model is failing, you do have to ask that question: is what's going on? What's going on over there?
And I'll give Ally credit where credit's due. They are at least attempting to spread out their business model outside of just auto loans. But it's all they were for since 1919 and until the year 2002. It's going to be the backbone of the company for a long time. You don't just shake it off overnight. Shout out Taylor Swift fans in the chat.
What else do we have before open on Wednesday?
I
Prologis, Logis,
I should have done
Synchrony.
U.S. Bancorp, but I didn't.
Yeah. First Community Corporation, First Horizon, Northern Trust. Anything, or are we skipping over to after?
I am ready to go to after close because I do want to hit United Airlines, but I want to jump straight from Ally to Discover because there's a lot of parallels in the two calls.
Yep.
So Discover, as you may remember, that Dave and I talked about a while back. Capital One proposed back in February of this year to buy out Discover, DFS, Discover Financial Services, in a $35.3 billion deal, which is, a lot to say the least.
That's a lot of money.
Because currently, like sitting today, if Discover and Capital One merge, it'll be the 6th largest credit card provider in the U.S. by volume. Getting into, Discover's earnings call, 606, which was phenomenal, by the way. 606 a share actual, 307 a share estimated. That's almost 100% beat.
Wow.
Dave, you want to take a guess into why?
Wow. I'm sorry. The numbers again. 303 estimate to 60.
307 estimate, 606 actual.
Oh my goodness. So like double.
Yeah, you want to guess why?
I have no idea.
So, for all my American friends, raise your hand at home if you have seen a commercial or heard of Discover Student Loans. Discover has been one of the largest private student loan lenders in the U.S. for God knows how long. Well, guess what? They're not doing that anymore. Discover has sold off their entire student loan business for $10.8 billion.
Where does that student loans go if they just forgive all the debt?
So, in the U.S., there are two types of loans. So you fill out what's called a FAFSA, which is just your application for federal financial aid. Those loans are through private companies, but they're secured by the U.S. government. But you can only get up to so much of those loans per year, which I don't really amount. I mean, let's just say you can only get 10,000 loans per year, but college costs 20,000. What do? Yeah. You can go to private companies like Discover, like Wells Fargo, like whatever, and take a private student loan. Private student loans are a little bit regulated by the government, but your private companies like Discover, if it's a private loan, it is not eligible for forgiveness. Right. Even if the federal government forgives all student loans, they will only forgive public student loans. Private loans can charge whatever interest rate they want. You do not get the payment plans like the SAVE plan, which that's not this podcast for everybody who saw the news for that the last couple of weeks. Government can't touch them. That's a loan.
Okay, I had no idea. Well, why would I, or how? I've never applied for a student loan in the U.S., so I wouldn't know, right?
I've never applied for a private one. I'll say that.
Yeah.
But yeah, and the Discover is another kind of interesting. Was like, man, what does that mean? For the stock. That's why they like doubled their earnings estimate. Why is the stock still down about 1% this week, I believe? Am I wrong about that? Oh, no, they're up about 7.5% this week, probably because of the good earnings call. Discover was one, when I was getting ready for their earnings call, I was expecting to hear a lot of charge-offs. Just kind of like we saw with Ally, because Discover, at least their core business model, wasn't a lot of ways student loans, but outside of that, it was also like credit cards. And they did very high-risk credit cards to like young borrowers without any credit. And they also did the same for like auto loans and things of the sort. But from what I can't find anything. If someone else can find something in the chat and like prove me wrong, or I haven't really seen anything regarding like above average charge-off. They said credit card spending declined in the US, but 30-day delinquency rate was only 3.7%, which is not a lot. And charge-offs were only 5.6%, which was up from last year, which charge-offs 5.6 for 3.7 a year ago. But still, that's not like terrible. That's a 1.9% increase on what is probably the highest risk credit card portfolio in the world. It's not terrible.
Wow, that's a lot. That's a lot of information there. Are we jumping back to United Airlines?
Yes.
Seems like we just talked about United. Has it been 3 months already, or there must have been some other airlines in between that I'm
There
just
have been. We've talked Delta. We just talked Delta, I think, like last week.
yeah, or did we? Yeah,
United.
not too long ago.
United, as their punchline, get on the flight, get knocked out. I that whole news story where they knocked out and bloodied that Louisville-based doctor. Dude, I don't know how they ever recovered from that, but they sure did.
I totally missed that story. I have no idea what you're talking
It
about.
was like back in like 2013.
Oh,
United,
okay, maybe
yeah,
I didn't know we were going.
United.
Didn't
We
know we were
should.
jumping into the time machine to go that far back.
United sold a flight, and then they said their own employees, like four of their own employees, had to be on the flight, and so they randomly selected four passengers who had to get off.
To get
One
bumped,
of
yeah.
Yeah, one of them was a surgeon who was in Louisville visiting his family. He was flying back to Chicago to do a surgery, and he refused to leave the plane. So United had security come in and beat him to the point of knocking him out and then carry him off the plane.
Yikes!
And you can look it up. That's a real story.
It sounds believable, yeah.
He sued United, and we'll never know how much money he got, but we all know he never worked again, or at least he didn't have to.
Right.
But yeah, United up about 5% this week. Travel industry has been a fun one to watch, Dave. $4.14 a share actual, $3.95 share expected, which was kind of expected. We see a lot of the low cost
That's a pretty good beat.
It is. It really is, because jet fuel prices right now are through the roof, which is why we're seeing a lot of airlines like Spirit, their profit margins are hurting bad.
Right.
But United, of course, being, having more international flights, having larger planes, and, also just being a more premium carrier isn't hurt near as bad like that, because, their profit margins are a little safer. So air travel across the U.S. has kind of been in a weird point lately with Americans, traditionally speaking, again, keyword traditionally, we are about to enter probably what's going to be the weirdest recession in American history. So traditionally speaking, when you look at the leading indicator of a recession, Americans spend cash until cash runs out, and they spend credit. Then when the credit runs out, we hit a recession. So typically, as the cash runs out, we get into credit, which is kind of where we are right now. And we're getting into American spending on credit cards like crazy. Usually the first thing to start to fall are discretionary purchases. And the first discretionary purchase to fall is always travel. It always has been.
Airlines and cruises. We were literally talking about this just last week or the week before, or both, or for several weeks in a row now.
Yes, we have. And but it's weird because not as much as you think. Like right now, other discretionary purchases, even down to like eating out, are falling much more sharply than travel. It's kind of weird that like people, and they're really saying mostly like millennials and like older like Gen X, are choosing to cut other areas of their discretionary budget back in favor of more travel.
Yeah.
Which is, ladies and gents, I'm telling you here, if we hit a recession out of this, which is still a very real possibility, it's going to be one of the weirdest ones in American history.
Yeah.
But you know what? I'm here for it. We ride it out.
So just to kind of add to that, the discretionary spending. So last Saturday night, I went out to just a local restaurant just down the street just to, grab a burger and not a beer, because I'm still
really, it's, as a friend, once again, very proud of you.
So anyways, I was looking at the appetizers on the menu, and appetizers have been kind of in the $6 to $8, $9 range for years and years and years, obviously priced in Canadian dollars. But I'm looking at the menu, and every single appetizer was priced at $12. So like just the price of restaurant food has increased dramatically, right? So and I think that's part of what you talk about in the discretionary spending definitely is all of a sudden it's like, oh, well, I used to be able to go and get, an appetizer for $6 or $7 and a burger for 12 or 14, and now it's all of a sudden $12 for the appetizer and 18 or 20 for the burger. It's like,
it's just not worth it. That's why like fast food profits have been hurting so hard when it's like just as expensive to eat at like McDonald's as it is like say at Chili's.
Yeah.
Let's go. Like, you and I have talked about this. Let's go to the sit down place and get better service.
Yeah, exactly. Do we have anything else to hit on Wednesday after close?
No, I'm ready to move on to Thursday.
Sounds good to me. Before open on Thursday, what is that top one there? Oh, is that TSM?
That is Taiwan Semiconductor Manufacturing.
Oh my goodness.
Everyone's favorite ADR.
Before we get into that, a whole lot going on there on Thursday before open. Cintas, Domino's, DR Horton, KeyBank down there at the bottom. And then after close, we've got Netflix, PPG. Oh, that's the paint, right? The PPG paints.
Sure. Sounds believable to me.
Yeah. Okay. Jump into it. Where do you want to start? Where do you want to start in Taiwan?
Yeah, we do have to start in Taiwan, the great country of Taiwan. Man, that could be interpreted as a political statement.
Do not go there.
Well, stock's down 10% this week. We can say that one. That's a non-political statement. $1.48 a share, actual $1.38 a share expected. So a nice little 8% earnings beat on there. God, one day someone is gonna math check these percentages, and they're gonna be like, "Man, he is just making this up off the top of his head." And you know what? That's right, I am. Man,
and we're here for it.
Hey, we sure are.
The entire passive income posse is here for it.
I'm gonna be fully straight with you guys. There was a lot of nerd stuff said during their earnings call that I don't know what any of it means. I don't know what it
wasn't. I don't know yesterday. The whole semiconductor space, everybody just took a nosedive and brought the whole market down with them.
They sure did.
Yeah.
I was saying I don't know what a node is. I don't really fully understand what a semiconductor is. I don't really understand what the chips are for. But
we just know that we need them. We need them for everything. Yeah, we're told we need them in our cell phones and our laptops and in our cars and in machinery and in everything, right?
I'm gonna be straight. I tried hard to understand this earnings call, but I have literally no clue what they're talking about.
Okay. Is that a good segue to move on to the next company?
It sure is. We're talking about the king of pizza.
So Domino's, I've had Domino's a few times recently, and honestly, all through the majority of my life, it's never been one of my favorites. But the last couple times I've had it, I'm like, oh, that's actually better than I remember. So maybe they've improved something. Maybe they weren't as good in Canada as they were in other places, like in the US and other places in the world. Anyways.
I was actually going to say the exact opposite. Domino's was my go-to for a long time. I even was a Domino's delivery driver for a while in college. I ate way too much Domino's pizza, but over the last 6 months to a year, I feel like it's gotten significantly worse. Really? Maybe I'm just getting older. Maybe that's what happens. I don't know.
You just get get a little pickier, and you realize, oh, well, I can get a better quality pizza from someone else. Who knows, right? Who knows what it is?
That's true. Domino's stock down 15% this week, though. Something ain't right. $4.03 a share actual, $3.65 a share estimated. Man, so
that's an okay beat. That's
nice little 10% beat there, 10-11%, which is pretty nice. So, I mean, if you ask yourself, how does the stock beat earnings that bad and still fall 15%? Well, first off, revenue fell short. Let's just start there. Global and U.S. national demand was down. Loyalty program actually looking pretty good and partnering with Uber Eats, which is kind of weird.
Right.
So the two things that really drove them down was Domino's, they don't make, it's like McDonald's. Domino's does not make a lot of money on the pizza. They don't. They are a franchisor. They make money when they open stores and have franchisees and then take a cut of that revenue.
Right.
And of course, there's some other stuff in between. So they didn't give a number, or at least not a number that I found, but Domino's did announce they will be opening significantly less stores internationally, specifically listing Japan, France, and Australia. And they will also have significantly less stores in the U.S. than they typically would. New Domino's openings are way, way down. And also, you know how we talk, tell me, Dave, how many times have we said long-term guidance or guidance over the next year? Or the stock's down because of bad guidance. Well, In this case, Domino's just isn't doing guidance anymore. They're suspending it indefinitely. So here's your fun fact. Everybody go home, look up a case study. It's called the Korean discount. Basically, it says that in Korea, we're going to say even South Korea in this case, stocks are traditionally priced cheaper because there's less disclosures. How can we apply that to this? Domino's Pizza is disclosing less information to investors, therefore making it a riskier play. Riskier plays are priced lower. Domino's stock falls because they won't disclose as much information. Again, highly recommend go home, look up a case study called the Korean discount.
Okay.
It's a great read for everybody at home. Do your homework.
Oh, I have not done homework in nearly 30 years, 25 years. So
I've got like 4 tests coming up in the next 3 months. I'm doing so much homework right now.
no, but that's interesting too. Just before we leave Domino's, how you mentioned, McDonald's and all the majority of the fast food franchises make money by selling another franchise, get that franchisor to pay the exorbitant fee. And if they're just opening less and less stores, then they're making less and less money.
I mean, hey, yeah, that and also with McDonald's will even they own the land the restaurants are on.
Yeah, McDonald's
and
is
the
a pure
franchise
like
releases
McDonald's.
it.
It can be argued that's a pure real estate play, right?
It is. I mean, I wouldn't say pure, but like
No,
it really
okay,
is though.
fair.
Good old McDonald's, man. That $5 value menu, Dave, you should try it sometime.
Folks, if you're listening at home and you don't know, he's egging me on right now
I
because
sure am.
McDonald's did not introduce the $5 value meal here in Canada, and I am still extremely upset about it.
You know why, right?
Because everyone hates Canadians.
Oh, well, that too. That you can't underestimate that. No, so McDonald's loses money on every single one of those $5 value meals.
Of
The
course.
point of that value meal is just to get customers in the door, and then when they get rid of it in a few months, then like I think come the end of summer they're getting rid of it. They're just hoping at that point you like your Big Mac enough, you'll come back for it regardless of the price.
Right.
So in Canada, traditionally profit margins are lower, and your population is lower, and in a lot of ways more spread out.
Yeah.
So it just, from a business sense, does not make sense to lose that kind of money in the Canadian market.
Okay, well.
But also for everybody at home,
they could have still put it in the McDonald's near me.
For everybody at home, Burger King also has a $5 value menu. It is way better of a deal.
And is it available in Canada?
I don't know, but I just had it the other night. Like, my wife and I were out, I think, shopping. Yeah, we are getting ready because my mother-in-law's here. We were shopping. We're like on the way home, and I'm like, I'm not cooking, and she said, I'm not cooking. So we ended up at Burger King. That $5 menu, it'll fill you up. It's a good deal.
We've definitely gotten distracted here, and again, we're on the time crunch tonight because you have that hard cutoff in like about 12 or 14 minutes. And
yeah, I gotta go put down some baseboards.
So let's jump over to Netflix.
How'd you know we were going to talk about Netflix?
Is because that's the name of the hockey arena in, I believe it's Pittsburgh.
I thought you were going to laugh at PP. All right, Netflix. As I have publicly stated several times, my least favorite stock on the market by far. Stock's down 3.11% this week. Good. I dislike Fiverr just because I think it was done for them to go public. I say this every time we talk about Netflix, whether it's their earnings call or not. Netflix is a means to an end. It is not a forever sustainable company. It's gonna.
Well, it already has, right? Like when Netflix took out Blockbuster, it was like, oh, Netflix is the only place you can, well, one of the few at the time to watch streaming on.
Oh yeah.
Like, and now there's so many streaming services. It's so saturated. Like you've got your Disney Plus and your Hulu and your Paramount and your Amazon and Apple TV. And those are just the like 5 I can name right off the top of my head. And I'm sure there's 10 or 15 more, right?
My big thing is like, you have a very finite customer base. And, as a publicly traded company, you are continuously pressured to keep raising revenue. After a while, which is going to be weird for me to say, well, you're going to think, why the hell did he say this in just a minute? You can't add customers forever. It is a self-defeating cycle. So
Right.
at that point, your only option to keep increasing revenue is to start screwing over the subscribers you have. That's
Increase prices,
ads.
yeah.
Which by the way, hey Spotify, I paid my first increased fee this month. You guys are next.
Yeah. While we're talking about ads, hey YouTube. Thanks.
See, I'm actually pretty okay with YouTube ads. That model does not bother me.
Well, the nice thing about YouTube ads is they've taught advertisers you need to have your message in 5 seconds because people are skipping this ad, right? Or there's a few unskippable ads that are 15 seconds, but for the most part, you've got to get your main point in that first 5 seconds.
I think my big thing with YouTube ads and like why I like them. For one, I think they're integrated. Maybe it's just because YouTube's had ads basically since day one. So they've kind of been in it. So they're like, for the most part, they're not screwing me over more than they already were.
Whereas, right. No, like if you're not, YouTube Premium or whatever those ones are called, YouTube, if you're just using normal YouTube, you're so used to ads because, like you said, they've been there for nearly 20 years now, right?
As someone who watches probably 50 plus hours of YouTube a week, I should really just pay for Red.
Yeah.
That said, 488 share actual, 474 share expected. I am not doing the math on that. It is, I don't know, like a 1% beat, 2%. Yeah, I'll call it about 2% beat. Quick math. Quick maths if you're in the UK, our one UK friend over there.
Yeah.
Quick, whatever the Japanese word is for math. Hey, Akito, how's it going? Yeah. Netflix, despite literally what I just said about them, added 8 million subscribers this quarter. Where'd they find them? I don't know.
Yeah, who knows, right? Who knows?
Stock's still down. Why is the stock down? How do you add 8 million subscribers, 8 million new customers? So let's start with where these new customers came from. I can actually say this now. A lot more. They are even further cracking down on password sharing.
Right.
Yay. Everybody's favorite thing. Third quarter revenue, they're saying, is going to be about $9.73 billion, down from $9.83 billion. Despite that, they're still expecting revenue growth for 2024 to be 14 to 15% higher than it was in 2023. And how are they going to do that, Dave? They're going to get rid of password sharing and they're going to raise prices again.
Yeah. And more ads.
And more. You can't forget about that. Dave's got a really good point, guys. More ads. Oh, yeah. And I really thought this was funny. Like, Dave, what do you think was the Netflix program that they credited with bringing in the most new subscribers this quarter?
I have no idea.
Bridgerton.
Don't even know what that is.
I don't either, but I know I've heard of it, and I know I've seen people make memes about it online, so I'm assuming I probably wouldn't like it. And that, ladies and gentlemen at home, is how you judge a book by its cover.
Are we going to talk about anything else on Thursday? We're going to jump over to Friday. Because again, I'm trying to make sure you get to your appointments on time here this evening.
I appreciate. I got 7 minutes to speed run Friday.
Okay, let me see if I can do this correctly this time. And
because the main thing we want to hit on Friday is American Express. Really, actually, American Express, and I got to say nice things about Travelers because they just renewed my homeowner's policy, and it went down for the second year in a row.
Oh, that's good.
Well, when you replace the roof and the windows and the doors, suddenly, stuff becomes less expensive to insure.
Right.
And the full HVAC system and the walls and the floors and
everything. Yeah.
Let me tell you, this is basically a brand new house with the same studs. That's all it is. Yeah. We have replaced everything at this point.
Wow.
American Express up about 1.5% this week. Good old AXP. 349 a share actual, 326 a share estimated. We're gonna call that another beat. I'm not doing the math because, guys, I've been doing this for too long. So once again, AXP can talk about their same little concerns that Discover had, which I thought was interesting because if you get an American Express card versus you get a Discover card, those are two totally different classes of consumers. Like you've gone from broke college students to, what is the Amex Platinum card, So, Dave, how much did Amex make from card fees last quarter for the first time ever?
No idea.
A little more than $2 billion. First time they've ever crossed that mark.
Wow. And $2 billion in a quarter.
Yeah. Yeah, double-digit growth actually. Quarter. So this is the year 24th quarter in a row, 2 years of double-digit fee growth for their business model.
Wow.
Yeah.
Yeah.
Yeah. That revenue did still miss, but profit margins looking pretty good. Consumer basically what it comes down to, consumer spending is surprisingly down. Once again, I mean, not even surprisingly. Credit's running out, boys. We just talked about what the recession fears mean.
Yeah.
But I mean, again, it's American Express. They're going to keep chugging along. I don't think anyone's cutting up their Amex card anytime soon,
No.
unless, of course, Dave Ramsey is getting more of a footprint than we originally assumed.
Okay, so you've already kind of given your shout out to Travelers. I don't know
did.
anything more you want to talk about there, or
Stock's
anything else
down
on American
4.
Express.
I'll hit Travelers right real quick before we go. Travelers actually had a weird earnings call. $2.51 a share actual, $1.98 a share estimated. Call that about a 25% beat, 26, 27. Stock's down a little more than 4.25% this week. Man, what the heck happened to Travelers is the big question. Like, how do you 25% beat on earnings and your stock falls? I feel like I've said that earlier today.
Yeah.
Um,
One of those make it make sense. Make it make sense.
It doesn't, but I mean, like when you start getting into it, well, I mean, let's take a little deeper dive. Q2 revenue was only was 11.3 billion, which is a pretty nice increase from 10.3 billion a year ago. But then we get into we're going to call catastrophe losses. In Q2, catastrophe losses for Travelers, which is basically the claims they paid, the money they lost on that, were 1.51 billion.
Wow.
And you want to guess what they were same quarter a year ago?
Probably a lot less than that.
Yeah, I don't actually know. But you want to guess what they were in first quarter? 712 million. It more than doubled quarter over quarter.
Wow. Okay.
Net investment income was a little bit up, but the main thing that really hit them was those catastrophe write-offs were, I mean, double last quarter, more than double last quarter. The cost, I mean, especially in an inflationary environment combined with a high interest rate environment, because I mean, the insurance companies are basically just banks with extra steps.
Right.
That's all they really are. Yeah, we're probably going to see a pretty big hit on a lot of these insurance companies' earnings over the next while, just because things are becoming so much more expensive to insure. I mean, building the same house right now is God knows how much more expensive than it was 5 years ago.
Oh,
I mean,
twice as much, probably, right?
Oh yeah, wood has gone up, labor has gone up, drywall has gone up. God, concrete's through the roof. For last I heard.
Yeah.
It's
copper, plumbing, all your fixtures, everything. Like,
oh yeah, and that's
copper.
I mean, God,
I think I already said copper, but like,
car prices again are up, home prices are up. I don't know, like what else do people insure? Personal property pricing of that is up. I mean, like we can distinctly say, I mean, even if you go by last month's Federal Reserve inflation report, this month's, excuse me, things are still 3.1% more expensive than they were a year ago,
yeah.
Not that, which is still, I mean, an increase of what, 11, 12% over the last 2 years? That's a pretty big jump in a pretty short amount of time.
Unreal.
And that combined with increased natural disasters in places like California gets pricey.
Yeah. Okay, so another week here on the Weekly Close Live. Thank you again so much for joining me, Joseph. I know I kind of want to. We haven't talked about it because I just realized, we haven't talked since last Friday, and then there was a little something happened there last Saturday afternoon there in northern Pennsylvania.
The attempted assassination.
I don't think you're allowed to say that word on YouTube.
Oh, guess what, bud? We're on your YouTube channel.
Yeah, I mean, wasn't that wild? Like, I mean, Twitter or X just blew up all late Saturday afternoon.
I mean, I think we can say the whole internet blew up.
Yeah, obviously, right? Like, anyways, obviously it was quite the. I mean, I know you're a lot younger than me, but man, I remember when there was an attempt on Ronald Reagan as well. So, I mean, and all of a sudden it's like, ooh, this hasn't happened in 43 years. Like this is a rare occurrence. People don't just try to do this, right? Like,
I gotta say, I hate to cut you off, but I do gotta get going.
yeah, fair enough. Fair enough. All good. Again, thank you so much for joining me again this week, Joseph. Probably not Dividend Dave. We will see
Probably
you
not.
again next week, and definitely tune in the next 2 weeks because Joseph and I do have a very, I don't even know if I want to call it a special announcement, but a very important announcement coming up in the next week or two.
That
And
we do.
yeah, so again, thank you all for joining in, watching on Twitter, X, watching on YouTube or the other platforms.
Yep,
Thank you
yep.
again, Joseph, for
Of
being here.
course. And
And
thanks
of
to
course,
everyone
as
watching at
always,
home.
hit that subscribe button on YouTube and the follow button on all the other platforms. And we'll see you again next week.
We'll be here.